Good morning. Very welcome you to our webinar. This time we are speaking about tax benefits for IT business and startups in Baltics, Belarus, and Israel. You are probably right asking why Israel, and here's the agenda, what you will hear in the next hour or so. And Ines, if you scroll to the next slide, then you can see my line of thinking that it all started with an article in The Economist that where I saw that Israel is actually #1 country of, if we count number of startups per capita. So very well done. And we have good friends in Israel. And I thought, why don't we invite to talk to us and to our clients directly some Israeli tax specialists about their tax environment regarding startups and explain us why is this happening in Israel and how Israel is so successful with startups. And for that reason, we have. I feel very proud to have the best Israeli law firm on our webinar, and we have Yuval, who is leading one of the partners of the tax practice at the leading law firm in Israel. Herzog, Fox, and Niemann. So Yuval, the floor is yours to explain about yourself, your tax practice, your firm, and also what everybody wants to hear. What is the reason for being so successful?
Okay, thank you, Yanis, for the kind words and for the introduction. I'm very happy to participate in this webinar. I think I'll divide my maybe to introduce myself first. I'm a corporate tax partner in Herzog, which is the largest law firm in Israel. We do a lot of high-tech and technological oriented work. Investments in Israel, mergers and acquisitions, and also, of course, startups, companies working in Israel, and also with R&D centers around the world. So maybe I can divide the discussion into two parts. First, I'll just give you, to reinforce Yanis' introduction, maybe give you some details, some taste of the Israeli high-tech industry. So the high-tech industry is about account for 50% of the export, the national export of Israel, and it's about 15%, 15% of the GDP. If you can scroll up one slide, that would be good. We have almost 7,000 startups in Israel, and about 300,000 employees, which account for about 10% of the working force in Israel, all dedicated to the technology sector. Although Israel is only less than 0.1% of the world's population, the investment, for example, in cybersecurity companies accounts for about 20% of the global investments in cybersecurity startups, and this goes on and on. We have two types of the high-tech industry in Israel is divided into two big portions. One is the Israeli companies that started in Israel and were built in Israel and keep operating as Israeli companies. They were not acquired by the multinationals. In these slides, you can see a list of these sorts of companies. All of them actually has a market worth of more than $1 billion. There are about close to 50 of these companies, and every year more and more companies of this size are being added to this list. If you can go to the next slide, we also, if you can go to the next slide, yeah. We also have a very large activities of multinationals in Israel. Mostly the industry was originated by acquisitions. A multinational like Amazon, Microsoft, Apple, Google, all the big names basically are very active in performing M&A acquisitions in Israel of startups. And then what happens is that they sell the intellectual property from the Israeli company to the multinational, to the global company, and retain in Israel an R&D center that basically is responsible to continue developing whatever technology or products they were doing before the acquisition. Over the years, Israel has become a very attractive place for these sorts of activities. We have more than 500 multinational corporations with R&D centers in Israel. And again, all the big names, mostly from the US multinationals, but we also have from many other countries, 35 different countries from the Far East and Europe and many other jurisdictions. I think that if you can turn to the next slide, since we are tax people, we'll talk. This was the background. Now to the second part. If we can talk about the tax regime, that is definitely a major factor in the success of the high-tech industry in Israel. The baseline corporate tax in Israel is 23%, as you'll see here. However, to companies that are active in the high-tech and technological sector, including pharmaceuticals, there is a 7.5 to 12% corporate tax rate. The difference between 7.5 and 12 is in the center of the country, Tel Aviv, and the 7.5 rate is in more peripheral areas, like in the north, in the south, but even also Jerusalem. Whoever establishes the company in these jurisdictions and employ the employees in these jurisdictions get get the beneficial 7.5 rate. The 6% rate is for companies that have a turnover of a big turnover. This is $300 million of turnover. This tax rate is intended to attract the big multinationals opening companies in Israel. The main condition for this reduced tax rates for all of this, what you see here, is for the IP of the companies to be owned by the Israeli company. So it doesn't work for R&D centers. It actually has to have the company itself has to own the IP in Israel. One famous company that took advantage of this provision is Intel. They established a very big operation in Israel, and they got this 6% rate in addition to substantial governmental grants and other incentives. As I mentioned before, we have two competing. The Israeli high-tech market is divided to two basic sectors. One, we have these companies that own the IP and develop the IP for their own benefit, and the other is the R&D centers. So this only applies, and this is a more attractive regime. It only applies to the companies that own the IP. I'll talk in a minute about the tax regime for the R&D centers, which is beneficial, but not as beneficial as this one. So for this one, you can also see the dividend rates. If the Israeli company is owned by a non-Israeli company, the dividend will be the 4%. And otherwise, it will be the 20%. However, Israel has a very strong tax treaties network. So to the extent that non-Israelis are investing, non-Israelis who do not qualify for the 4% rate invest through countries from which Israel has a tax treaty, they will be able to benefit from the reduced tax rate. Just to give you, a taste. So, for example, for Estonia, we have 0 rate on dividends for a company owning more than 10% of the Israeli company. Latvia 5%, Belarus 10%. So the dividends are pretty attractive. So this is the regime. This regime is compliant with the OECD requirements for tax competition, and so in order to be compliant, there is this nexus formula that requires the income to be that is subject to this reduced rate to be produced in Israel. So meaning that to the extent that there are employees that are not in Israel or R&D expenses that are not incurred in Israel, then this will not be subject to the to the special tax regime. However, there is a way around it. So if an Israeli company owns a service center, R&D center in another country, let's say Estonia, that will qualify under the nexus formula. So in the one hand, it's compliant with we have this nexus formula requiring that the income would be produced in Israel. On the other hand, there are ways around it to qualify for this. So if you can go to the next slide, please. Yeah. So in addition to the attractive tax rate, there are also cash incentives from the government. It used to be called the Office of Chief Scientist. Now they have a more sexy name, the Israeli Innovation Authority, but it's a government agency that provides cash grants to technology companies. The only condition, it's very easy to get these grants. However, the condition is that the intellectual property will be owned by the Israeli company. To the extent that you take out the intellectual property outside of Israel, you have to refund the grant, and there is also some penalty that you need to pay. But so long as the IP remains in the Israeli company, there is no problem. So if we go to the next slide. Now I spoke about the Israeli companies, the one segment, the unicorns, the startup that owns the IP. This slide relates solely to the to the R&D centers. Like Microsoft has a big R&D center, Apple, Facebook, each service center employs between 1,000 to 2,000 employees in Israel. Intel, of course, on a different segment has a big operation in Israel. So here the tax rate is 16%. It's not as low as 6% or 7.5% or 12%. It's 16%. The dividend is 20%, but usually these companies work on a cost plus basis, so the margins that are left in Israel are not very high. Dividends, the formal statutory rate is 20%, but as you could have seen, the tax treaty withholding rates on dividends is much lower. And frankly, there is no big profits left in Israeli companies, so it is less of important. I should also mention that there is a zero rate VAT, so the Israeli companies do not pay VAT for the remuneration for the service, the R&D services that they provided to the global group. Usually, let's say the cost plus is anywhere from, what we see in practice is anywhere from 5% to 10%. With the bulk of the companies usually in between 7-8% is something that we see quite a lot. Although it's not in this slide, and this is something important to mention about the tax system in Israel. There is a very generous employee stock ownership regime, stock incentive regime. Employees, many of the employees in these companies are entitled to get either restricted stock units or stock options or various other incentive programs that are tied to vesting requirements. The tax regime in Israel is very attractive in terms of how to provide incentive. The employees are taxed on 25% instead of 50% and sometimes even more on ordinary income for work compensation. So many of these companies, not only the R&D centers, but also the unicorns and the regular Israeli IP owners provide, usually you'll see in the cap table, 10 to 20% the stock owned by employees, and that's a significant incentive that the government is providing to the high-tech sector. Moving to the next slide. Yeah, I'll just, I see that I don't want to take, I can talk about it for an hour, but I just want to say a few words about the aspects for the investors. If you go to the next slide, so tax investors in Israeli startup companies who are non-Israelis are usually tax exempt when they sell the shares in the Israeli companies. This was done in order to get in line with all Western countries that provide capital gains exemption to their investors. So any investments done in an Israeli company, when you sell, there is an exit and you sell the shares, you do not have to worry about Israeli taxes. You are simply tax exempt. The only caveat is for VC funds and sometimes private equity funds. In order for them to be exempt, they need to get a special ruling. It is possible, but it is a process. And maybe one more thing to say that, to look out for, to be very careful. We know that there are some, the capital gains tax exemption does not apply to what we call a permanent establishment in Israel. So if the non-Israeli investor has some sort of a permanent establishment, an office, or something alike that is responsible for these investments, the capital gains exemption might be denied. And the tax authority in Israel are taking a very broad interpretation of what is constitute a permanent establishment. So, for example, for the funds, for the VC funds, you get a special ruling and you avoid this problem. But we see situations where we have non-Israelis who hold here an office with a representative that is doing some scouting work for startups, do some diligence on startups, but maybe negotiates in the investment terms. All of these are there is no clear law in Israel, but all of this might give some headache to us tax advisors when we advising. Again, the problem is that this will be considered as some sort of a permanent establishment and then deny the capital gains exemption on the exit. So this is a sensitive area in Israel, but so far I think that we are able to get tax exemption even in this situation, but this is something that remains to be seen. So I think that's the last yes, I think that's the last slide. Hopefully hopefully that was a good summary of the tax regime in Israel. If you guys have any questions, I'm obviously available at the end of this session to address it. Thank you again for inviting Herzog to participate, and we obviously be happy to address any issues. Thanks.